My name is Priyanka Bharadwaj. I'm a chartered accountant. I'm also a company secretary, having more than 7 years of experience now. I'll be getting you to a basics of accounting standards, a basic introduction for the accounting standards. So
Uh,
let's look.
Priyanka, sorry. Is your slide visible right now?
Yes, it's visible.
Okay, please go ahead. Thanks.
Yes, thank you. So we'll start with a definition. We'll just have a look at the definition. We'll not go through like a normal definition. We'll look at the pointers, the important words which are being highlighted. Accounting standards are written policy documents issued by expert accounting body or by government or other regulatory body covering the aspects of recognition, measurement, presentation, and disclosure of accounting transactions in the financial statement. So, what do you mean by recognition? When you are making your accounts financial statements, you have to
Hello.
recognize. Yes.
Hello.
Hello.
Hello, I request all the other participants to please silent their mic while the presentation is going on, please.
Then I will leave you this application. Sir, I will leave you this application.
Priyanka, you may continue.
Yeah. Okay. So the first aspect, recognition, you have to recognize the events and transactions that happened so that you can account for it. All the events and transactions in the financial statement. First is recognition. Second, once you recognized what are the events and transactions that you have to account for, then you have to measure those events and transactions. So these accounting standards will tell you how to measure those events and transactions which you have recognized to present in the financial statements. Once you have recognized the events and transactions, you've measured them, then comes the presentation part. Presentation is very important when you are making your books of accounts so that the users of your financial statements, be it your shareholders, be it the government authorities, its bank, or your prospective shareholders, they will have this presentation on the basis of which they are going to make well informed and prudent decision when investing in your company. And the last comes disclosure. What are the accounting standards that we have followed? What are the policies we have adopted while preparing our financial statements? We have to disclose all this in the financial statement. Say, for example, for some reason, we have to deviate from the standard accounting standards and follow something which is not usually followed. You have to disclose this in your financial statements that you have used something else, and apart from that disclosure that you have deviated from the standard accounting standards, apart from that you have to also give the impact of that deviation. Okay, so next slide. Can you switch over to the next slide? Yeah. Consensus on accounting policies. So when we follow a certain standard accounting policy, some standard accounting rules, there has to be consensus over the industry. So for example, first is inventory valuation. When we value our inventory, we follow AS2. In that, some may follow FIFA, first in, first out, FIFO, some may follow LIFO, some may follow the average uh, uh, weighted average method. So it has to be consensus has to be there so as to two financial statements can be compared. Same is the case with capitalization of cost. When you go to capitalize certain costs, say for example, you have got a fixed asset and you have to spend certain amount of money in the installation of it, then the installation charges are also needs to be capitalized along with the cost of the fixed asset. Same is the case with depreciation and amortization. For depreciation, mainly there are two widely used methods: SLM, that is straight line method, apart from that WDV, that is written down value method. So two organizations, two companies using different methods of depreciation cannot be compared, because in case of SLM, the cost of the fixed asset is depreciated over the period of time on in equal installments, whereas in case of WDV method, written down value method, the depreciation in earlier years are more than in the later years. This can be used in companies where there are more of repair and maintenance expenses, so that the depreciation in earlier years when the asset is new is more, whereas the repairs and maintenance is less. As we proceed in further years, depreciation keeps on decreasing and repairs and maintenance keep on increasing as the asset is getting old and it needs more repair and maintenance. So while following a particular accounting standard, you have to recognize what is your requirement, and it has to be consensus with the existing industry. Next, when we talk about having a standardized accounting policy, we are talking about the advantage. What are the advantages that we need a standardized accounting policy throughout the organization? So first is credibility. When you adopt standard accounting policies, accounting principles, your books of accounts, your financial statements are more credible. The people using those account, your books of accounts, your financial statements, your stakeholders, government, banks, prospective shareholders, they can rely on your statements and they can make a prudent and well informed decision. So your books of accounts are more credible. Second comes creativity. So few there are few transactions where you can twist the books of accounts by changing the accounting policies. So once your accounting policies are standardized, you cannot twist the financial statement as per your advantage. So the second is creativity. You cannot be creative when your accounting policies are standardized. Third comes comparability. So when you compare two organizations, there has to be on similar platform. So we can bifurcate comparability in two parts: intra-company and inter-company. Intra-company means you are comparing your own a single company's financial statements over a number of years, and same accounting policies has been followed. So, for example, comparing one financial statements of a company for financial year 1819 to financial years of 1920, if the same accounting policies has been followed, you can easily compare it. Even if you have deviated from a particular accounting policy, you have to disclose disclose that this accounting policy you have changed, and also apart from this disclosure you have to give the impact of change in the accounting policy. So this was intra-company. Now we come for the comparability in intercompany. So when two different companies are being compared, you can only compare them if they are following a similar accounting policy over the number of years. If one company is following SLM method of depreciation and the other company is following WDV method of depreciation, the books of accounts are not comparable. You have to get them into same platform and then you can only compare. So these are few of the advantages of standardization. Next, now with the emergence of globalization, we sometimes need to compare our books of accounts with books of accounts of some foreign company. Say, for example, an Indian company wants to invest in a foreign company, or there is a subsidiary company in foreign country. where the holding company is in India. So there comes the need of a standardized accounting principles policies which are followed by all the countries globally. This was there comes the International Financial Reporting System, that is IFRS. This has been issued by international bodies along with ICAI India, so that same or similar accounting policies are being followed throughout the globe, and we can that can be easily comparable. Now, when this IFRS came into force, the ICAI ICAI in Convergence converged the Indian AS along with IFRS. So, being a certain type of economy, being a certain type of country where issues are different, there was some practical difficulties where we cannot follow IFRS as it is. So there was the need for some convergence. So the Council of ICAI, along with other government bodies, came to convergence and they converged Indian accounting standards along with IFRS, that gave birth to Ind AS, that is Indian Accounting Standards. You can either follow Ind AS, or there are some existing notified accounting standards that you can also follow. When this Ind AS came into force, there was some timeline was given for the implementation of this Ind AS. If you want to voluntarily follow Ind AS, it was applicable from 1st April 2015, but from 1st April 2016, it became mandatory. So everybody has to follow Ind AS. So far, the Council of ICAI has issued 29 accounting standards. Those 29 accounting standards, each accounting standard has its own lectures and nitty-gritties. But out of those 29 accounting standards, two accounting standards has been withdrawn. AS6, that is depreciation accounting, was withdrawn with the with AS10, with the changes has been made in AS10, that is property, plant and equipment, and depreciation has been taken in AS10, and AS6 was completely withdrawn. Apart from that, AS8, accounting for research and development, has also been withdrawn after the issuance of AS26, that is intangible assets. So now we have to read 29 accounting standards thoroughly, so that our books of accounts matches with the it has a standard way of presenting the true and fair picture of the financial statements. That's it from my side. Thank you. Any queries will, I think, take later. So